On to your markets news now. The Asian markets we track closed mixed. This followed a fall in U.S. markets yesterday on worries about the escalation of tensions in the Middle East. This as Iran sent a barrage of missiles to Israel in retaliation for the killing of Hezbollah leader Hassan Nasrallah and other senior leaders of the group. The Nikkei share average declined by 2.2%, while Hong Kong continued on its high note after returning from a holiday on Monday, with the Hang Seng Index closing up 6.2%. US stocks U.S. stocks ended the first session of the fourth quarter on a downer. This as concerns around the growing geopolitical tensions in the Middle East increased, while market players also digested economic data coming out of the U.S. Given some of the risk, investors decided to pile into so-called safe haven assets, which saw the dollar reverse its weakening trend. The Dow Jones Industrial Average fell by 0.41%. The S&P 500 closed 0.93% in the red, while the tech-heavy Nasdaq declined by 1.5%. The JSE is higher, with the all-share index adding 1.1%, hovering around 87,554 points. The rand is weaker relative to major currencies. This follows, of course, the US firming. The rand trading at 17.39 vis-a-vis the US dollar, 23.10 against the British pound, and 19 rand 25 against the euro. Looking at commodities, gold is trading at $2,649 and platinum at $1,006 per ounce, while the price of Brent crude oil is trading at around $75.59 a barrel. Well, to unpack the markets for us, we have a newbie on the block for us. I'm joined by Trevor Gavin. He's the head of multi-management at Nedbank. Thank you very much, Trevor, for joining us. So clearly there's some fear in the market, and when that happens, people jump into the dollar. So we've seen that sharply firmer against other currencies, and I suppose that will also mean that's why we're seeing the rand losing a little bit as well.
Yes, hi, and lovely to be on the program. Thanks for having me. Yeah, I think you've summarized it all quite nicely, and I think if we had chatted yesterday as opposed to today, it would have been quite a different conversation. So certainly if we look over the last 24 hours, the rand has weakened to the dollar, as you mentioned, to about 17.39 as we sit here now. If we sit back yesterday, it was quite a different story, let alone 2 or 3 days ago. So the rand actually hit a all-time high for the last couple of years of about 17.08 to the dollar a few days ago, on the back of an opposite type of environment where markets were looking optimistic and positive. And then, of course, in the last 24 hours, we had the Middle East erupt, and that's caused market jitters. We've seen the oil price per barrel increase over the last 12 hours or so. And as you said, the oil price has increased now from $72 a barrel to about 75, and the futures are actually showing it going up to about $78 to $80.
Yeah.
And that's of course on the back of jitters about now the supply of oil into the global markets.
Yes. As I mentioned, when market players get nervous, they jump into so-called safe haven assets like gold. But interestingly enough, the gold price has actually come down slightly. What is your kind of future outlook for gold, given what's going on? And it doesn't look like it's going to get better anytime soon. Are people going to be piling into gold as we go forward, do you think?
Yes, well, I think traditionally we know gold is a safe haven asset, as you said, when people fear the markets or there's increased risk out there, and also when inflation is high, and it's a safe haven often seen or a hedge against inflation. So you're right, over the last 24 hours or so, the gold price has been fairly static. But if we go and look back over the last month, first of all, gold was up 5% in September. And it's up a massive 27% year to date and close to 50% in the last year. Now, I guess, what is the reasons for such a rise in the gold price? I think we've seen a proliferation of ETFs on the market, which have been buying gold in order to get to their required weights. We've seen central banks buying gold as partly a hedge against inflation. And also, we've just seen fund managers globally around the world increase their holdings towards gold bullion. So overall, we still see actually a good upside to gold, even though inflation globally has started to come down and we've seen interest rates starting to be reduced by all of the central banks. But I think the next key measure with gold is probably around $3,000 an ounce, and we're at 2,658, as you said today. And overall, we don't see the demand falling. We actually still see upside potential in gold.
Yeah. You touched on the oil price, but I wanted to find out from you what OPEC has been saying, because we know that they met recently. What fundamentally were they saying about how they're going to deal with the oil market from a supply point of view?
Yeah. So again, I think, the oil stage has changed so dramatically, literally in the last 24 hours. But you're correct. OPEC had mentioned in the last week that they were going to increase the supply of oil onto the market. We know oil had been quite low, around that $70 per barrel. So there was actually a oversupply of oil into the market, keeping prices quite low. And part of the problem has been coming out of China. So China, who's the biggest importer of oil globally, their economy has been struggling, and they just last week announced a stimulus package plus reduced their interest rates, and that's been very positive to the markets as well as to the oil price. So yes, so OPEC have announced they're going to increase the supply of oil. China hopefully is going to be taking up some of that slack. And of course, just yesterday, we had the conflict break out. And there the problem is the Suez Canal and the Straits of Hormuz, where a lot of the oil travels out of the Middle East around the world. And if those supply chains get broken or under threat by conflict, this has also, of course, pushed the price of oil up.
Yeah. Very uncertain times. Trevor, thank you so much for your insights there. We're bringing our interview to a conclusion now. That was Trevor Gavin. He's the head of multi-management at Nedbank.